The ROI Metrics tab is all about your deal's returns. You'll find your cap table, the return metrics, and the distributions table. The numbers that you see here for the distributions and sale proceeds are automatically pulled in from the projections tab, specifically from the equity investor distribution section that we just covered. As you adjust assumptions in the left side panel, these values update in real time. That means you can quickly test different deal structures and terms and instantly see how they impact investor returns. So you can optimize your model for the IRR or MOIC you're targeting. Let's walk through each section. The cap table shows the amount invested, the type of equity each investor group is receiving, if any equity step-up multiple has been applied, and the post-step-up value for both the preferred equity and common equity. And then how those values translate into the company ownership percentages. The return metrics table breaks out the distributions, the sale proceeds, IRR, and MOIC by investor group. You have the summary table above, which isolates the searcher's returns versus investors. And below that is a table with the exact same numbers, but broken out by each investor type. It also separates each investor's total returns into the portions that come from preferred equity versus common equity, giving you a clear breakdown of how each layer contributes to overall performance. The table below that breaks out the distributions year by year, based on the number of years you've projected in the Projections tab. You can isolate the returns by specific investor group by selecting them in this drop-down menu. This can be helpful if, for example, you're negotiating an equity rollover with the seller. You can compare how the seller's returns look if the rollover is classified as common equity versus preferred equity, and with or without an equity step-up. One important thing to note is that any cash flow that drops down to the usable free cash flow row in the projections will flow into the ROI Metrics tab as profit distributions for the searcher. If you have investors and you set your distribution start dates for those investors to begin after year one, you may see usable free cash flow in the projections before your preferred obligations have been paid. However, until you have fully paid your preferred obligations to preferred equity investors, that usable free cash flow will not flow into your returns. You can treat that as cash that will accumulate in the business. In other words, it becomes retained cash, money that can be used for working capital, growth investments, or cash reserves. So in this example, you'll see the usable free cash flow from years 8 through 10 flow into the ROI metrics, but the cash from year 1 will not. To view this in the ROI Metrics tab, use the dropdown to select Search or Promote. This isolates your carried interest, also known as the surface promote or searcher's carry. You'll notice that the usable free cash flow from year 1 doesn't appear here, but the later years do once preferred obligations have been met. If you've also contributed your own capital to the deal, select Search a Co-Invest. This shows the returns tied to your personal investment, separate from your promote. And the combined returns for both the Search a Co-Invest and Search or Promote appear here in the Return Metrics section. Now, let's touch on tax distributions. If your deal is structured as a pass-through entity, such as an LLC or an S-Corp, you'll need to issue tax distributions to all owners. That will include yourself, investors, in the seller if you have a seller rollover. These are automatically calculated by taking the income taxes from your projections tab and applying the company tax rate from the taxes section. It then takes that value for each year and calculates each investor group's tax distributions based on their common equity ownership percentages. If your company is structured as a C Corp, those distributions aren't made to investors, since taxes are paid at the corporate level. You can turn off tax distributions by selecting C Corp, and that column will be zeroed out. And finally, this projected return tool lets you model returns for any specific investor type. It uses the terms you entered in the assumptions panel, such as equity step up, ownership methodology, and equity classification, to calculate the projected cash on cash returns over the full hold period. This can be a helpful tool when pitching investors. For example, if a potential investor asks, if I put in $100,000 in your deal, what kind of returns can I expect? You can select acquisition investors, which will pull in the terms for that type of investor. You'll then enter 100,000 here and instantly be able to see their year by year cash on cash returns, along with their IRR and MOIC.